All right, so our next panel is very timely and a nice segue. We're going to talk about the regulatory implications of stablecoins and CBDCs, which are central bank digital currencies. And I'm going to turn it over to Sandra Rowe, who is the CEO of GBDC. And I'll be monitoring the Q&A and jumping in as needed.
Great. Well, I cannot get my video on, so if the AU team could help me get the video on, that would be great. Thank you very much, Joseph and Bob, and especially Caroline, who just spoke. Hi, everyone. So we are about to segue into the CBDC and stablecoin conversation, which is, of course, very timely because we will pick up some of the stablecoin discussion that Bob and Caroline just had with, we've got Anna Carrier from Norton Rose Fulbright. We have Jennifer Lassiter. If you guys could turn on your video and your audio, that would be great. Executive Director of the Digital Dollar Project. We've got also Patrick Hansen, Crypto Venture Advisor for Presight Capital. Hello, everyone.
Hello, everyone.
Wow, and everyone has their background and
there.
everything.
I'm not sure if I have my background right. Can you see it right? Because
yes,
yes.
And actually mine is wrong.
No, it's
right?
wrong when you see it.
Yeah.
So I think that's what I have it.
Well, there you go.
Okay.
So first of all, I want to thank all of you for making the time to have this very important discussion. I think we want to start with some basics firstly, because people tend to confuse still today the differences between stable coins and what a central bank digital currency is. And I think it would just be great. I do want to go around the world and also kind of do a gut check on where we are. But Jennifer, could you just give us a definition of, or sorry, just kind of elucidate for us, what do you see as the difference between a CBDC and when someone says I'm issuing or I'm using a stable coin?
I can, and I just flipped my background and now I don't know if you all can see it correctly. It's good? Okay, thumbs up, perfect. Thanks, Sandra. Lovely to be here with you and Patrick and Anna. Sure, happy to give a quick definition. So central bank digital currencies differ just a little bit from what you just heard in regards to the definition for stablecoins. Very simply put, a central bank digital currency is the digital form of a country's fiat currency that is also a claim on the central bank. So it is a direct one-for-one in terms of representation versus what we just heard from Caroline, where a stablecoin would be pegged or attached to the value of a fiat currency. So what this would look like, by example, is instead of printing money, a central bank would issue electric coins or accounts backed by the full faith and credit of the government. What form a central bank currency would take, whether it is that token or that accounts-based system, is still to be determined today. And we're seeing that play out through different experiments globally.
Fantastic. Well, thank you for that. And I'm going to go to Anna to give us, seeing that you sit in Europe, giving us a very a basic, but also give us a landscape view of what is going on within MiCA legislation coming out of the European Union, but also the UK now, outside the EU, and the UK legislation and talk that's going on that could also color what's happening in the US related to stablecoin CBDCs.
Sure, will do. Thank you, Sandra. Hello, everyone. So Brussels, I think that's maybe starting here because this is where I'm based. I'm here, and that's actually, I think, where we are most advanced in terms of the regulation on stable coins at the moment. So I think that's probably, people on the panel might be, or in the audience, will be familiar with what we call the Brussels effect, where the US innovates and Brussels regulates. And so one may argue that the stable coins and crypto assets is probably one of this area when this very definition applies, but basically just giving you like a very high level overview of where we are and what MiCA is, because we're using the acronym and mindful the audience might not necessarily be aware of what that is. It's the proposed regulation on markets in crypto assets that came out about 2 years ago and was very recently adopted in principle We still haven't seen the final text, and I was kind of hoping that in advance of this panel, I might actually be able to see the finals, but not yet. So we are still anxiously waiting to see that, but it has been agreed in at large. So what MiCA will do, it will be the first kind of EU-wide horizontal harmonized legislation that would regulate markets in crypto assets at large. So it will address the issuance of crypto assets, all sorts of crypto assets, not only stable tokens, but all sorts of crypto assets. It will put the obligations upon the issuers. It will put the obligations upon those entities that will be looking to provide services in crypto assets. It will set out rules regarding market abuse applicable to those markets. So it's really, really long and prescriptive piece of legislation. So we won't go into the whole level of details here at this panel. It's not the point. But in terms of this the stable coins regulation, which is the topic of this discussion here, that's what MiCA will do. MiCA will bring the whole set of rules applicable, set out the rules applicable to those issuers that will wish to issue crypto assets, stable coins, for use in the EU, or to make it listed, traded at the crypto asset trading venues in Europe. And those are really, really prescriptive. We can discuss that maybe later, or mindful that this is just the introduction, but just starting with the fact that the entity will have to be incorporated in Europe. It will have to apply for authorization, which on its own will be very, very lengthy and presumably challenging process. It will have to have all sorts of policies, procedures, rules, compliance systems, controls, and checks in place before it will be deemed as compliant with the rules, including rules regarding reserves assets, redeemability of those assets, liability towards holders of those stable coins, and so on, so on. So we can discuss the details later. But that's effectively what MiCA will do. And there will be two levels of supervision, almost as prescribed by the legislation, kind of normal one at national level for a majority of stable coins. But there also will be a category of what was called a significant asset-based asset reference tokens or stable coins that will be subject to EU level supervision. And the legislation will prescribe the thresholds. And there was quite a lot of discussion of how to define significance. And again, haven't seen the text yet, but we understand that part of the component of the stablecoin being used in international circulation will be taken into the account when defining what's significant. So that's broadly at the EU level. A question when this will become applicable, again, $1 million, because we haven't seen the text, but rather soon and sooner than later. So we hope to see the final text very, very shortly, final approvals, probably Q3 this year, Q4 publication official, and then those provisions are likely to become applicable quite soon afterwards. In the UK, just switching and moving on across the channel here in Europe, the approach has been slightly different. So I think that the UK as such has had an approach that governed crypto assets for some time now, but not a regulation as such applicable to stablecoins. This is something which is new, and this is actually happening again as we speak now, with the very recent publication of the major Financial Services and Markets Bill that proposes to bring stablecoins within the regulatory perimeter of the UK existing one by amending existing legislation applicable to payments and to e-money. So this is slightly different approach, not creating rules from scratch, but adopting what's currently in place, with prospective further consultation on a broader set of crypto assets, and again broadening the regulatory perimeter. So this is just starting now, those discussions in the UK. So we should be following those very closely, but and see how different they are from what we will have here in Europe.
Yeah, thank you, Anna. And we're going to put a pin in it. But the UK potential legislation is actually very important, because if they really do define stablecoins in the context of payments, it actually has some very direct implications for then how can you turn around and call it also a security. And I think there's a further discussion around what happens for other regulators who may see stablecoins or define them differently. So, but we'll leave that for 1 second. I want to go over to Patrick, because as an investor, as someone who's in the crypto space, you have a different vantage point. And so if you could just tell us, number one, what are some of the things that you're thinking from an investor standpoint, crypto investor standpoint, but also how do you see Mika in the context of, some people say if you're glass half full, you get Passport into 500 million plus audience. That's really great. It's going to be a streamlined, clear regulatory path. That's very good from a clarity standpoint. But then on the flip side, obviously there are some challenges around how onerous and how difficult that may actually be. Go ahead, Patrick.
Yeah, thanks. Happy to. And first of all, glad to be part of this round here, and looking forward to the discussion. Thanks, Anna, for the great overview of Mika. I think, from an investment perspective, obviously, CBDCs are less interesting if we want to talk about CBDCs and stablecoins, because obviously they have a public issuer, so there's no private investments into CBDCs, but they could obviously affect the market and have some impact on the market. So it's something that I follow closely. I think the personal issue I have with commenting on CBDCs more broadly is that the specifics of the CBDC designs, of the CBDC technology, etc., are so unknown as of now that it's very, very hard to comment on how this will affect the stablecoin market, the crypto markets broadly. So I kind of refrain from going too deep into commenting on CBDCs as of now, but I'm looking forward to the EU and the ECB and the Fed and other central banks detailing more specifically what they are planning on the technological and on the economical and the policy level. With regards to stablecoins, I think you mentioned a couple of advantages that Mika brings into the European market. So I think the two most important ones are obviously to harmonize the big European single market with regards to stablecoin issuers. I think that will be really helpful. So if a stablecoin issuer project in Germany or France wants to issue its stablecoin in the future, it just has to seek authorization with one financial authority, and it basically can passport that kind of financial service and product throughout the EU. So I think that will enable those kind of projects to scale way more quickly in the EU, and hopefully allow for the scale of crypto projects in the EU that we haven't seen so far. Because to be honest, most of the larger crypto projects sit in the US, and I think it's in our interest. I'm here in Berlin, based in Germany, to change that. Going a little bit more into the specifics, I haven't followed the first sessions here, but there are obviously different designs and forms of stablecoins: the fiat-backed one, the crypto collateralized one, and the algorithmic one. And then there's different arrangements: centralized, decentralized. I think with regards to fiat-backed stablecoins, I think that Mika will bring a lot of regulatory clarity, but the hurdles are high, as Anna mentioned. So I think the markets in a couple of years will definitely concentrate and focus around a couple of successful fiat-backed stablecoins in Europe. I don't expect all of the currently existing dozens and more euro stablecoins to survive. So the markets will definitely concentrate here, and obviously from an investor perspective, it's key to think about who will be the successful ones that will be able to navigate this complex regulation. The crypto collateralized one, to be honest, are more global in nature and not necessarily euro denominated. So I see less impact here from a regulatory perspective. And very briefly on the algorithmic stablecoins, I think, Mika makes no exemptions for those algorithmic stablecoins. So I see a tough future for those, especially for those that want to denominate their algorithmic stablecoins in euros. So as, for example, the CELO euro stablecoin. Here, I think there's two options for those kind of projects. Either they try to really decentralize 100% and basically try to avoid any kind of enforcement and regulation. But that has its, downsides as well, because the adoption rate might suffer. Or they have to somehow centralize and try to seek authorization, but that's a very, very tough path. So I'm not super bullish on algo stablecoins denominated in euros. I think the regulation is not super fit and adapted to that kind of business model. But these are a couple of considerations I have around stablecoins and the regulatory impact of MiCA, and happy to go more into detail.
Yeah, no, that's a fantastic start, Patrick. You've raised a lot of important subtopics there for us to go into. But I do want Jennifer to be able to weigh in on central bank digital currency, because I do think there is a lot of confusion around not just countries throwing out that they're working on a CBDC project, but what does that really mean? And frankly, what's real and what's a bit of a hype on the CBDC side? So Jennifer, could you please explain to us sort of where's the landscape around how many projects there are around the world? And then also, what is the role of the digital dollar project in particular? Because you do have a very specific role in your coordination between public and private sector.
That's right. So I pulled, actually in preparation for this, I just pulled a couple of statistics that I think Sandra will help to share from the Atlantic Council's Central Bank Digital Currency Tracker, which is a very well done, very in-depth research tracker. I encourage everyone to fall down that rabbit hole, have fun for a couple hours exploring what they've created. But these are some statistics that I've pulled from that research. So 105 countries representing over 95% of the global GDP are exploring central bank digital currency. 19 of the G20 countries are exploring a central bank digital currency, with 16 already in development or pilot stage. And the last 6 months alone, South Korea, Japan, India, and Russia have made significant progress. Of the G7 economies, the US and the UK are furthest behind on central bank digital currency development. They're still in research phase. The European Central Bank, as Anna mentioned briefly, has signaled intention to deliver a digital euro around 2025, so mid-decade. 10 countries have fully launched a digital currency, with China's pilot set to expand in 2023. So I think those are very important numbers to pay attention to, because the question of what shape a central digital currency takes in terms of policy and technical design choices, as well as whether or not a country issues a central bank digital currency, kind of sits at the vortex of those statistics. So the geopolitical implications of those questions are quite large. So that should help, I think, ground a little bit as to why we're paying attention to central bank digital currency. I'm going to work my way backwards a bit. Why should countries care about central bank digital currency? Why has this become kind of the topic du jour these days as we're thinking of the suite of digital assets more broadly? So there are a lot of reasons that countries are considering this, right? And I think it varies greatly on the individual country and each country's economy. They may want to maintain central bank effectiveness and independence in monetary policy. We heard that spoken to a bit in the stablecoin session prior. They may want to continue providing public money access to central bank money and accommodating, right, citizens' shift in behavior towards a more digitally native environment. They may want to increase resilience during a crisis. We saw this, of course, with COVID-19. We've seen it again with the invasion in Ukraine. More recently, they might want to drive financial inclusion. And then, as we've seen spoken to in several of the US policy requests for comments that have come out from the Federal Reserve Board, the executive offices and agencies, and even Capitol Hill, this desire to ensure competition and interoperability in our payment system or across our payment system. So that's kind of why the use case for why we're exploring it. And then I think there are very real challenges that we have to address, because in addition to why would we choose to deploy a central bank digital currency, comes the question of what problems is it currently solving, or what problems could it potentially create for us? Some of those problems, of course, we're not aware. So Public interest, right? Money is a social construct. If there is not a desire within your citizenry to have a central bank digital currency, would it actually succeed if one was rolled out? Impact on the financial system and payments, very similar, I think, to the stablecoin conversation that we're also having. Offline use of a central bank digital currency. I think digital connectivity plays a large role, particularly as we look globally, but certainly across the United States as we have varying degrees of connectivity available to citizens. Cybersecurity risks, most certainly to infrastructure. If we build an infrastructure that supports it all and that system is attacked, that becomes quite a vulnerability globally. And then cross-border payments with inconsistent standards. So we've seen, as I shared, a lot of countries doing a lot of work building their individual central bank digital currency to reflect their individual needs. What does that mean if we don't have an international standard setting body or operations in place to ensure that we're able to support all of the various forms of CBDC? So overlay both challenges and excitement around what could come. And I think you have to think of geopolitical considerations again. New payment systems will create situations that impact the daily lives of citizens. We see it every day. I mentioned a couple situations that have happened more recently where we've seen it come to play, and that will impact the policy objectives of a country. So just in a nutshell, that's kind of why a CBDC and how countries are looking at it. Briefly, I will share that the Digital Dollar Project exists very specifically to further the discourse on a US central bank digital currency. We're a nonprofit based out of the US, but of course, money knows no boundaries, so we have a lot of global partners. But one thing that has been consistent across papers, again, we've seen the Federal Reserve Board release a paper, we saw the Federal Reserve Bank of Boston release a prototype, Treasury has released a request for comment, Commerce Department, the list goes on and on. We saw the Executive Office, of course, release the White House released their executive order on digital currencies. What is common throughout each of those statements is a desire for private-public partnership in both understanding the technologies that are available for central bank digital currencies and then understanding the policy decisions that would be needed to support the outcomes, right, that we might be driving towards as a country. So Digital Dollar Project works to do just that. So we're a think tank in the sense that we're convening thought leaders, publishing papers, but what we do that's very unique is that we experiment with the private sector on central bank digital currency hypotheses. So again, that symbiotic relationship we're trying to establish, we're testing the technical design choices, we're analyzing the outcomes that are produced, and then generating thoughts on existing policy frameworks or perhaps the need for new policy frameworks that would support those outcomes. And again, a central bank digital currency by nature, and Patrick mentioned this, it comes down to the issuer. The issuer is central bank itself. The Federal Reserve is the sole decision maker as to whether the US will release a CBDC or not. Digital Dollar Project is here to ensure that we're bringing to bear the resources of the private sector to create data so that the decision makers have data in the process of decision making, but also to make sure that the private sector is prepared if the central bank digital currency is rolled out, which we believe will really help bolster adoption at that point, because again, money is very much a social construct. And then I just wanted to make one comment. I was really moved by the way that Tamika was talking about Web3 in his opening, and really at Digital Dollar Project, we think about central bank digital currencies as a means to move a store of value in Web3 or across Web3, across metaverses, right? to do that and really to underpin kind of that philosophy, as well as what sits at the core of DDP experimentation, is this belief that the infrastructure underpinning the movement of those stores of value, whether a cryptocurrency, a stablecoin, or central bank digital currency, that infrastructure serves the greater societal good. And because of that, the infrastructure should be developed in a transparent manner through private-public partnership. And this is what will enable innovation, competitiveness, and again, Tamika referenced this, but most importantly, this is what embeds democratic principles that free societies hold dear into that system. So I appreciate that CBDCs is being brought under the umbrella of Web3, because I think that principle of serving the societal good is very shared in this instance.
So I'm glad that you raised that. I'm going to put a pin in that one, because there's a lot of questions around the war on cash, as some people are calling it, and Big Brother seeing everything that you're doing and then being able to analyze that data and make all sorts of potentially very catastrophic policy decisions on individuals or groups of people. So Patrick, I'm going to go back to you, and then we're going to go back to Anna. I want to go back to Europe. Well, first I want to go back to stablecoins versus CBDC. There are those who say it can be kumbaya, we can all work together, we can all coexist. There are others that say, well, hold on, especially the fiat backed one-for-one stablecoins were created because the on and off ramps for crypto were so difficult and frankly didn't exist where you could have bank accounts easily. So, Patrick, what are your views of a world, particularly the European landscape, where MiCA comes in? It is going to be pretty onerous, at least based on what we're seeing right now. All stablecoins are getting captured under it. You've alluded to your views on algorithmic and whatnot, but focusing specifically on fiat-backed one-for-one. And then ECB launches a euro equivalent. Pockets of coexistence? Is the pie big enough?
Yeah, I think it really comes down to how those CBDCs will look like in detail. I think from what I'm hearing from the ECB and also other central banks, to be honest, I don't think there will be too much competition in the short term. Because from what I foresee, but I might be wrong here, I don't expect the ECB, for example, to issue a euro on a public blockchain like Ethereum or others. And I think, and this technological foundation to be built permissionlessly as a bearer asset on public infrastructure, I think is one of the key advantages, right, of private stablecoins, fiat-backed stablecoins right now. People can just use that kind of open permissionless code to build use cases on top. People can use those kind of fiat-backed stablecoins for trading use cases, payments use cases. A couple of use cases have been mentioned earlier. And I don't think that a CBDC that is not issued on a public blockchain, and that might be a digital euro, for example, a euro CBDC, is competing on those kind of use cases with private stablecoins. So it depends on the technicalities. I expect the ECB to go more in a direction where the CBDC resembles more a kind of digital form of cash. So basically just a bearer asset that can be held even online, offline. But I don't expect them in any way to issue that on public blockchains. And even, from all the papers that the ECB issues, they also are planning to implement some kind of maximum caps on the CBDC they are going to issue. So all these details coming out of these exploratory tests with Euro CBDCs make me more and more optimistic that actually CBDCs, at least in the Eurozone, won't be too much competing with private stablecoins. But obviously, I might be wrong here. If the CBDC if the ECB decides to issue, a CBDC on Ethereum that is completely permissionless, where people can build code on top of, that is privacy preserving and open for anyone to use, we might be in a more competitive landscape, obviously.
Absolutely, great point. That's a very different proposition if you're on a public chain.
Sandra,
yeah,
can I just add to that? I just wanted a clarification for the audience, which is when we talk about central bank digital currencies, there are two types of central bank digital currencies. There's wholesale CBDC and retail CBDC. Wholesale CBDC is the transactions between a financial bank and other financial institutions. The retail CBDC is going to be person to person or consumer to merchant. So this is what's accessible to the general public. I think this is really important to call out because there could be an instance, to Patrick's point, where a central bank might say, we'll release a wholesale CBDC, but retail and direct release potentially to consumers, which is not something the central bank does right now, is not something we're ready to undertake or we want to undertake because it doesn't get us the outcomes that we're setting out to achieve. So just an important distinction for the audience as we think about CBDCs more broadly.
absolutely. That's an excellent point, Jennifer. And actually, I think if you all take a look at the Central Bank of Brazil, you'll see that a lot of the recent discussions that have been had coming out of that central bank is really focused on wholesale, and they feel like they have a very good and robust retail payments internal, at least domestic, solution, and that will probably not mean that there will be one a CBDC equivalent for a retail perspective, at least not in the short term. So Anna, I want to go back over to you related to some of what's already been discussed here, but ultimately your view on also stablecoin in a CBDC in Europe coexisting, short term, long term.
I think I really second what Patrick has just said, because it's for all the reasons he mentioned, and including those caps that potentially will be applicable to holdings of any sort of digital euro that ECB will issue. I think one of the figures was the 3,000 euros or something, and then again. So I think stablecoins probably will get a head start, and we know that there is obviously the industry's interest to do that and to advance on it. And I think there is the broad agreement broadly also in all sorts of research papers also coming from public institutions that what's happening with the CBDCs is very much reactionary to what's been happening in the private sector. So it's not the other way around. So I think ultimately there will be some sort of coexistence, obviously, but I would suspect that in terms of more broader application user cases, broader use, that will go towards the stable coins that will meet the relevant regulatory requirements.
If you don't mind, there's a question here that I'd like to pose, may or may not be a difficult one. How does the rise, this is from Marcus, thank you Marcus for the question. How does the rise of populism within European politics, by the way, I don't think it's limited to European politics, I think that's international phenomenon going on right now, impact the adoption of cryptocurrencies or affect regulation in terms of different types of governments having different weight on, I guess, their views on cryptocurrency?
Oh, that's a tough one. I don't know. Maybe Patrick has your own views, whether the growth of populism has an impact on stablecoins here. I can certainly say that a geopolitical situation in which Europe is right now has a big bearing on the adoption of some of those rules. That's certainly because we all know what's happening. The war is happening in Europe, and there was a strong push from the really like top leaders, including the ECB down to on the policymakers, to actually get their act together in time and adopt those rules rather than drag their leg and prolong the discussions on the rules, for all those reasons that we need to have bring stability, transparency, harmonization to the system, and not just MiCA, but also rules around transparency concerning the transfers of crypto assets. So that's definitely where there was a very, I think, quite direct application to that. So
yeah, I would actually make the argument in the US, we've seen bipartisan support for cryptocurrency regulation. So if anything, it's been a unifying topic. I don't know if that surprises anyone, that there would be agreement on both sides of the aisle in the United States, but I find that in general, there's a overwhelming actually bipartisan support to not kill innovation, provide prudent guidelines and regulation, and finding that balance is obviously where a bit of the battle is happening.
Yeah, maybe just 2 cents on that. I think one difference I feel like between the US and the EU is that crypto in the US has become, by now, I would say, and my feeling is some kind of, top political priority in the top, I don't know, 10, 20 of the political topics in the US. You see high-level senators, political stakeholders, expressing their opinion on crypto, Bitcoin, etc. In the EU, crypto and even the adoption and the negotiation of MiCA remains, at least as of now, a niche topic, which is really dealt with by some experts, some bureaucrats, and then single members of parliament and single politicians. So I don't think that the current political landscape in the European Parliament, for example, had a big impact on crypto. It was not a very political, not a very not a very at least not from the right, not a very controversial topic in the European Parliament. There were some discussions between, I would say, more the Greens and the more center-right on the sustainability impact of Bitcoin, but that's mainly it. I would say where the broader political landscape has probably more effect is on the discussion around central bank monetary policy writ large. I think obviously the central bank in Europe faces some huge challenges with rising inflation, rising debt levels in a lot of European member state countries, and I think I think there's a lot of headwind ahead for the ECB in that regard, and I think that might affect obviously also decisions on the CBDC project of the ECB.
Yeah, absolutely. And Jennifer, you mentioned the White House executive order. That was pretty seminal in getting a lot of government agencies who are now diligently working on their digital asset reports, which we're largely due in September. It's one of the reasons why we're gathering here with the audience that we have. What's your take on the collaboration that you've seen across agencies? And I think it's been really actually quite good with the public-private sector dialogue. It's really gone up in the US related to regulation.
Yeah, I agree, Sandra. I think seeing the Federal Reserve Board discussion paper released in February, the executive office or executive order hit, I think, early March. And that was quickly followed by the RFI request for input from the Commerce Department. And then, of course, we saw in July the request for comment from Treasury. And for Commerce and Treasury, of course, they each have their own slant because they have different mandates as agencies, but their request for comments stemmed from the executive order. So when I talk about it, I also like to share with folks, as a reminder, what an executive order is and what it does. It gives the instruction to agencies, executive agencies in the US, to be able to move resources to do a set amount of work that perhaps was not accounted for through the previous budgetary cycle. So it's an important administrative step that has to happen for the research to be done. And I think it's indicative when you see an EO, it's typically because there's been enough noise from the public and from the agencies themselves that have said, we need to pay attention to this. We need to be able to dedicate resources. So it's a very positive sign. And having seen, I think no less than 10 pieces of legislation or CBDC statements and papers come out of Capitol Hill across this calendar year as well, really shows this whole of government approach that doesn't happen very frequently, and it doesn't certainly right now in the US. And so again, very encouraging. The other note that I'll put out there is that a request for comment is the government's way of saying, we want your feedback. And they're starting very much from a research perspective, which is to say, help us understand, using the current payment system as status quo as our benchmark, what impact there could potentially be with digital currencies, whether it's a cryptocurrency, a stable coin, or we were encouraged to see quite a healthy set of questions around central bank digital currencies more specifically. So they're really taking this approach, which I think is important, which is not, here's a new technology, let's do a thing. It is, what is the benchmark? What are the problems that exist right now? And could we actually solve some of those problems with this new system? There is the work that came, of course, out of the Federal Reserve Bank of Boston, Project Hamilton. This is open source research level code, but it's a prototype, a start of a US central bank digital currency. I'll encourage everyone on this call that has a technology background to go into their GitHub repo, OpenCBDC, and play around a little bit with that. It's really meant to engage citizenry and to engage the private sector to help evolve this starting point that they've put out there. And then I'll also share Open Digital Currency Initiative, which is a partnership between Digital Dollar Project and the Linux Foundation, which is, again, utilizing that open source community and all of the open source CBDC work that's been happening globally to start to iterate off of each other and bring to bear the weight of the private sector in this open source manner to accelerate the conversation. So all of that, I think, quite appropriately stemming from the US. I think, Anna, said, maybe when you started, you said the US innovates, Euro does policy, right? Our policy is perhaps is slowly moving along, but the innovation is where we can really start to capitalize on understanding what outcomes we're trying to achieve through policy and what technical choices will get us there. So I'm encouraged.
So I really appreciate that. I am going to pivot in our last sort of 7-8 minutes to a global view. And I'm going to throw a little bit of a, well, I'm going to throw something out there. You'll agree or disagree with me. But I just went to a forum with the Swiss and Singapore governments meeting together in an inaugural session in Zurich and brought on digital assets. They brought not only government groups together, very, very senior folks, C-suite in crypto, C-suite in TradFi, and or traditional finance, as sometimes they're referred. And it was just interesting to see, number one, people are still not using the same language. It was actually extraordinary how much talking at each other and then missing that occurred. But more importantly, this dialogue is critically important for different stakeholders to talk at a global level. But what was the most interesting to me as an observation was how little the US, and yes, there was sort of, mentions of EU and for sure, Mika, but it was amazing where there was not the US in the center, but you were really kind of as a periphery, and the discussion was really APAC Europe. That was very interesting in the sense to me of who will actually lead on this regulatory harmonization? Because at some point, there has to be at least some baseline agreements to make this global. Otherwise, we will just end up with the same sort of regulatory and legal arbitrage that we find in financial services. So Anna, Patrick, Jennifer, I don't know if you have any specific views on this, but I'd like to throw this back to you. Switzerland and Singapore, two very small countries population-wise, but heavyweights when it comes to forming clear regulatory and sort of definitions around the digital asset crypto space. Are they really the leaders in terms of setting the tone for regulation? Or do they get trumped when eventually the US and the EU come in? And the EU has already come in. It's not taking a jab at the government.
I can start.
Yeah.
No, it's okay. No, because I think it's a real question, right? And so when we hear folks talking about, and even I use the language, the US and the UK are lagging behind, right? What does it mean to be a leader? I think it is actually the question that I would pose, because harking back to some of my original statements around developing a CBDC is meant to be a laborious process based on the needs of your country, the policy outcomes you're trying to achieve, and is very dependent on economy size, economy needs, and unique, of course, to the needs of your citizens. So a country the size of the United States, I wouldn't want rushing to get something out without experimentation that lines up with very specific policy outcomes they're trying to achieve. A lot of transparency needs to be had around that to be a leader or to be the first one. Now, that comes at some consequence, right? And the further along the US takes to provide that transparency or make some concrete decisions, the faster the folks who are already out and front running on are going to be. So when I say not so lightly, the list of 6 countries that have accelerated CBDC work in the past 6 months alone, the question we have globally is, you know, what principles do we want in the global system that we're building to support our respective movement of money or stores of value? And I think that's where leadership becomes, you know, you're losing ground the longer you take with the tension of, please don't rush into something and not make a data-driven decision.
Right.
That's my 2 cents.
Excellent, thanks.
Mine, perhaps, if I can add to that as well. So obviously, I think sitting where I sit, obviously Brussels and the EU, probably legislators would want the EU to be the leaders. And I think that we've seen that in other parts of mainly financial services works, when the Brussels legislates and expects the others to follow suit. And then it turns around 5 years later to find out that nobody else has done it the same way. And we have to kind of reverse what we have, because the system doesn't work in versus like third country market participants or service providers, and we see it now in all sorts of other in other space. So this is one. But I think naturally, in terms of if somebody is supposed to help to harmonize the approach, I think that kind of falls almost by definition to the international standard setters that should kind of pick up this work. And we know that this work is happening in different shapes and forms at the various fora hosted by the Bank for International Settlement. So the BCBC, sorry, Bank for the Basel Standards Committee is looking at the prudential exposures to crypto assets, and that work is quite advanced. There will be new I think the consultation is happening. There will be new rules again for the member countries to adopt. That's there. We know that the IOSCO is looking at the is having a task force dedicated to crypto assets that's actually headed by the FCA, I think. So there will be some works towards the harmonization, especially like market integrity, consumer protection rules, and so on. So I think that naturally is where those are the fora where all those regulators can come together and try and agree some sort of common approach / definition.
Yeah. Patrick, did you want to say anything around that?
Yeah, I agree with Anna. I think long term, I mean, even midterm, in a couple of years, crypto regulation. So I only talk about crypto regulation, not CBDC here, but will be harmonized around the globe. And I agree that those international standard setting bodies will gain in importance. However, those recommendations are most of the time pretty high level. So if you look at the operational nitty-gritty details of how crypto companies have to set up their prudential setup, their operational setup. And here I think that the European MiCA regulation will really have a global impact and really have consequences and second movers and similar regulations around the world. I've even seen last week some US commissioners, I think ex-CFTC Commissioner Giancarlo and also current Commissioner Pham, stating that they're kind of afraid that MiCA will just set standards around the globe, and that the US has to move if it doesn't want to just basically adopt the same rules, since companies have already changed the whole processes around those requirements. So I think the EU is definitely years ahead here, because those kind of legislation from start to finish takes time, and I don't expect that to happen in the US anytime soon in the next year or so. So I think that could be a positive advantage, obviously, for EU regulation and EU companies that adapt from the early days to those regulations. But I guess only time will tell.
Yeah, and I think Patrick, some in the room here would tell you that when US is pressed, it can move very quickly when it wants to or needs to. So we'll have to see. But we have one final for 60 seconds. I'm going to do a round robin very quickly. There's a tweet quote that talks about, and we've said this, that we think that this next generation of stablecoins and hopefully CBDCs as well really fulfills this Web3 vision of a democratized and truly more equitable society. There is a tweet, particularly for those who are skeptical, generally in life would say that they adhere to this, which is, tech will evolve, like all things evolve, but nothing actually really changes. How do we ensure that does not happen? So what are you guys going to do about it? Few seconds. Give me your last word.
So everyone, oh, go ahead, Patrick. You go. You start.
I mean, I would just have a very short answer. I would say that, you know, it's really the first time in 40, 50 years that we see a fundamental disruption of the technical infrastructure of the financial system, with people being able to self-custody, to transact peer-to-peer. So however regulation will look like in the end, I think the disruptive, innovative potential of that technology, and in the end, no matter the regulation, will make sure that we don't end up in the same place as before.
Jennifer?
Yes, I would just build off of what Patrick just said, which just around intentionality. So we have to be very intentional about what outcomes we're trying to achieve. Of course, there will be unintentional consequences to what we do. That is life, that is technology. But we need to be clear about what those values are that we hold dear around individual privacy, around universal access, around security, right? For example. So I would say the best way to do that is to get involved. So get out, and as an individual citizen, of course, use your right to vote and speak to your legislators. They play a huge role in this process. And if you are of the finance or technologist mind, Digital Dollar Project is open to all for participation. So join us and be a part of some of the projects that are testing and really helping create that marriage between tech innovation and policy. And then finally, I'll just say, for those of you who hold privacy very dear, this is the call to action for you to get involved is so high. I'm going to put a link in the chat to a wonderful op-ed written by Daniel Gorfine and former acting FinCEN director around the marriage between individual privacy and some of the technologies that are available to us right now for your consideration. But we must figure out how to both capitalize on the societal good of a central bank digital currency while not compromising individual privacy. And I think we can do it. It just, again, goes back to that intentionality. So please join us. I think
Wonderful.
I took 120. Sorry, Sandra.
No worries. That was wonderful. Anna, your last thoughts.
Very quickly, I think really agree with everything what Jennifer and Patrick has just said. So technology evolves, but actually things will change, you know. So and that's the whole point of the discussion that we're having. So that the accessibility, the opportunities that this whole the project, both CBDCs and stablecoins bring to different actors and people worldwide potentially, it's huge. So so we can't say that nothing will change. It's we're, I think, moving towards quite a different future with lots of opportunities, but also risk, as Jennifer was saying, which we have to be quite properly addressed.
Yes. Hopefully everyone is bullish on this. It's people power. We all have to have a say, and we all have to do. So let's all bring it together. And I want to thank particularly Bob and Joseph, who are co-directors of the Academy of Emerging Technologies at the Kogod School of Business at American University. It is also academic hubs like this that bring us together to be able to have these fundamental conversations. And so let's support also the initiatives that Bob and Joseph are spearheading. Over to you.
Great, Sandra. Thank you so much. Thanks for being a big part of making the Academy successful. Thanks to Anna, Jennifer, and Patrick. So